Well, hey guys, hey, silver's down 34.86 today. Gold is down to 1406.30. A lot of bad economic news came out today. We had American job numbers. We had the first time unemployment claims go up last month. We had our trade deficit jump 15.1%. China came out with some bad economic news. I think that's probably what's hurting everything. We had Spain. We had their debt downgraded by Moody's. So the euro debt crisis over there has kind of given the dollar some strength today. That's why gold and silver are down so much, I believe. And I think there seems to be an uncertainty as to whether this day of rage in Saudi Arabia is going to happen or not. If the Saudis are able to contain it, obviously that'll take some of the fear out of the oil prices, and it will send the prices down. So maybe people are thinking they'll just wait and see what happens tomorrow before they jump into the oil. And I kind of think all these things are happening at the same time, trying to kind of dragging it all down. But I mean, look, if you were looking to get into silver or any kind of commodity, today would be the day to do it, or maybe even wait a little longer. It might go down a little bit more. But you want to get in when they're going down, not when they're going up. But if you stop for a second and you look and see what's actually changed in the world, there isn't a lot that's changed. The American dollar, although it may have went up a little today, it's weak as anything, and it doesn't have a lot of promise at all. The euros beat. The emerging economies like China and India, they're still trying to improve their situation. I read some old articles that were talking about China was adding 1 million people to their middle class a week. And it was a 2008 article I was reading that said that 500 million people lived in the cities there in China, and that over the next 10 to 20 years, another 500 million more are gonna move into the cities. So that kind of coincides with what I said before about China's ambitious building programs. They're going to be building a lot of low-income housing or small housing or units to put all the influx of people coming out of the rural areas and into the cities. And obviously these people now want to eat like they do in the West. They want to have all the gadgets that the people in the West have. They want to improve their standard of living. They want their life to be easier. To do that, they're going to need energy. So they're going to be buying up lots of energy. They're going to need water, lots of clean water. So they're going to be buying up lots of things to make water filtration and water purification. They're going to want to eat like Americans, so they're going to be buying grain to feed their hogs and their chickens. They already started buying, just a couple of years ago, they weren't buying any dried distillers grains. Now I think it's over 3 million tons a year or something. They're buying these dried distillers grains, and they're feeding them to their cattle and to their, not their cattle, but to their hogs and their chickens. So there's still a lot of, if they're still adding 1 million people a week to their middle class, that's going to create a hunger for all the things that we here in the West are used to having. We're used to having cheap oil, plentiful oil anyways, and we're used to having most things on the cheap, commodity-wise, because a lot of these things are priced in dollars, and it's been an advantage to us to have them priced in dollars. But now our dollar isn't worth anything, so now it costs more for these things in dollars. And now that we're not the only country competing for all these resources, the cost for everything on all accounts is going to be going up. So, it's not so much that there's a, maybe there's not a, they'd say there's not a supply problem in oil, but you know what? There's a supply problem because now we have to supply more people. So, you know what? I think that as we going forward from here, regardless of what the markets do in the short term, it's nothing but higher prices, higher demand in the emerging economies like India and China. And it's going to be less for us here in the developed nations. And we're all in this competition now for the same energy and the same limited amount of resources, the same copper, the same silver, the same gold, all these things. Now all these people have in the market. They all have the same opportunities that we've had for a long time to get into these things. The difference is, I think, they're actually investing in them. When you have 1 million people added to your middle class every year, if it's stayed the same there in China, and you have a government that's encouraging its citizens to buy gold and silver and to invest in these kind of things instead of, paper assets, then I think you only have a growing demand for silver and gold. I mean, 1 million people a week with the opportunity to buy silver and gold. I think if you haven't thought about jumping in, I mean, the price is down today. It would be a good time to do it. It can only go up from here. If you factor in all that demand from those people, 1 billion people in China and 1 billion people in India, and they all want a piece of the pie, they all want to improve their station in life, that just tells you that all these things that we're used to having, all the prices are going up. That includes food and commodities. It doesn't matter. You know, food commodities and precious metal commodities, I should say, and building commodities. All these things are going to be going up, which is just going to increase the price for everything, for everybody. And the only way to hedge yourself against that kind of thing, I would say, would be to invest in those commodities, or to stock up on food commodities or things that you know you're going to need in the future. Buy them now while the price is low, and then you can you can save money in the future. So that's my take on what's going on here today. And if you have a different comment or a different opinion, please leave one below.